Moving on to fixed income space, yields on Nigerian Treasury bills continue to slide in the latest auction. Well, ahead of a bond auction on April the 17th, now this to break down activity in Nigeria's fixed income market. I'm joined by Malcolm Gilroy at Dunn Loren Merrifield. Well, thank you so much for joining us, Malcolm.
Thank you, Onyi.
Well, now, analysts have predicted an increase in activities in fixed income markets owing to the recent instability recorded in the equity segment of the NSE. Now, what are your thoughts on this?
I think the NSE is starting to fade a little bit. This month it's down about 2.5%, although it's still up 20% for the year. And I can see some re-asset allocation coming out of the equity market and going into the bond market, especially if we see the bond market rally a little.
All right, now while Treasury bill yields rather at the auction appears to be, falling. Now, what's responsible for this?
I think it's probably the expectation of the market that we're going to see fairly low inflation rates. People are talking down as low as 8.75%. Apparently food prices have fallen, so everything else is pretty much equal. We would expect to see inflation certainly below 9.
All right, now what do you think can turn this around, basically?
A shock, it would be a real shock to the market if inflation was above 9%, and then I think you'd get quite a big sell-off.
All right. Well, okay, go on.
I don't expect that. I think that the analysts have had a pretty good handle on where inflation is, and that we should see inflation probably below 9. Certainly that's the expectation of the central bank, and it's the place that they would like to get inflation down below 9%.
Well, quite a lot of money was mopped up through the open market operation Treasury bills. Now, considering that we have a bond auction this week, do you anticipate the same level of activity in OMO this week?
Yes, we should see quite a lot of OMO because we have 220 billion naira maturing in Treasury bills this week, plus we also have fact money coming in. So the central bank is going to have to do quite a big mop-up operation. All
right, but let me just get a quick one from you now. What are your expectations for that bond auction this week?
I think it should probably, we've got a pretty flat yield curve, almost 11% right out from 1 year to about 10 years. And I would expect that the auction is going to come in somewhere just slightly lower than that, because I think that there's probably still some international buying by virtue of the fact that the Barclays bond index has now included Nigeria for the first time this month. And index buyers will probably wait for the auction to buy. I don't anticipate it's going to be very much, but I would expect that the curve will be reasonably flat between 10.75% and 11%. All right.
Well, what are your expectations for the bond auction? What's the outlook for yields going forward? Your outlook for yields going forward?
I think probably reasonably positive. I hope they don't go too quickly, but I would expect that over the next 3 months they would go from 10.75% down to maybe 10% and possibly going into 9.5%.
Well, you did mention something earlier. You mentioned the fact that, Nigeria has been added to the Barclays index. Well, let's take a very good look at that now. Foreign investor inflows into the bond market has been soft this quarter. Well, let's take a proper look at, Nigeria being added to the Barclays index. What difference do you think this will make, apart from what you mentioned earlier?
I don't think that there's marginally very many players that are going to utilize the Barclays index that haven't already come in through the JP Morgan index. However, there will be some that only use the Barclays index, and therefore there will be some buying. But I don't anticipate that it's going to be very much.